So the question is, should you put emergency funds into cash management? So cash management is usually basically defined as those cash accounts. So cash accounts are offered by a variety of brokerage platforms as well as banks, notably in the last couple of years by robo-advisors. So the problem with these cash accounts is that largely they are not guaranteed used to generate similar returns as cash. Basically, the general idea is that they're supposed to appreciate as cash or very safely invested cash. The problem and the reason I do not think that you should invest in cash accounts or invest your emergency money in cash accounts, especially if you have very urgent upcoming needs, is because in the last couple of years in particular, many brokerages also realized that they are trying to make more money through cash accounts. So typically the fees on cash accounts are actually very minimal. We would say maybe somewhere between 0.2 to 0.4%, and this is much lower than the market average of charging perhaps a 1% flat rate. And so most companies don't make a lot of money from these cash accounts. The general idea behind a lot of these cash accounts is to try to convince you to swap it into a more profitable investment later, especially when markets are good. But they've also found that a lot of people like to keep money in these cash accounts, and especially since the question is, will we keep emergency money in these cash accounts, right? With the implication that we will take it out anytime, right? So that's not going to be a lot of money for the brokerages, right? And so they've realized that they do want to make some money from these. And so when you look at the cash accounts or the cash management accounts of these brokerages, it is important for you to see if they are in fact in cash investments or in fact they are in bond investments, because some of these brokerages will put quite a bit of money towards these bond investments, and we can see in the recent months that bond investments have gone down, right? So we have a lot of people online which have been complaining about they put money into a cash management account thinking that it was very safe. They lost not a lot of money, let's say 2 to 4% for example, maximum. But this kind of thing can be very irritating when your emergency fund is, let's say for example, $100,000, and then maybe some of it is perhaps designed or geared towards maybe you renovating a property in a couple of months, so that $4,000, $2,000 of $100K capital could be really significant, could be very frustrating. Yeah, and the upside is not exactly amazing. I would suggest that you can consider other options when it comes to your emergency funds. Frankly speaking, I do think that your standard things like, for example, multiplier accounts on DBS, your UOB one, not the best, but certainly okay. Many fixed deposits are also quite appropriate because there's a reasonable chance that you wouldn't take out that money even after a 6-month period, but that even if you did take out the money, there'll be no penalty at all.